we are doing May June 2015, paper 12. Now, up till 16 or 17, they had only 10 MCQs, and after that, they had a pattern of having 30 MCQs. So, what we will do is we will do the MCQs and we will do sums also, the ones which are related to our syllabus. Come on, the first one, read. This is the second paper, page 22 of the thing that I have sent.
Miss, which one is this? Did you send it on the group?
What is the purpose of bookkeeping? Why do you do bookkeeping? What is the purpose of bookkeeping? Why do we do bookkeeping?
Because I think
Why do you do bookkeeping? Identifying trends over a number of years. This work accountant does. Accountant prepares trial balance. No, bookkeeper prepares a trial balance. Accountant prepares financial statements. Presenting the parties with relevant information. This work also the management or the accountant does. What do you mean by bookkeeping? Whatever is happening, when you keep on recording that in a book, it is called bookkeeping. So bookkeeping is only recording and preparing. Preparing what? Trial balance, SLCA, PLCA. So what is the purpose of bookkeeping?
prepare financial statements of the business.
Bookkeeping means recording the transactions.
Record financial. Sorry.
What is the purpose of bookkeeping?
Record financial transactions.
Miss, it's to record financial transactions.
To
Miss,
record financial transactions.
Miss, so state journal, purchase journal and everything. The
Recording is the work of bookkeeper, but when you're finding net profit, gross profit, or finding the balancing, correcting errors, analyzing, that all is the work of an accountant. Okay?
Okay.
Now this is related to rectification, but rectification you all have not done, so I am proceeding ahead. This is BRS, it's not there. Come on, do the D part and tell me.
Miss, 1 second, can you stop recording?
Yeah, one. Come on, try to figure out the D part, the D question.
Miss, the first thing that you take is a computer system.
Capital expenditure.
Yeah.
Capital expenditure is expenditure on what?
That doesn't happen on a daily basis. Not
That
recurring.
doesn't happen on a daily basis. So expenditure basically for what?
For annually it happens. Or
Expenses that happen yearly.
yeah, yearly.
The expenses that happen yearly would be the recurring expenses. And recurring expenses are not capital expenses.
Not yearly, not yearly.
Recurring expenses are revenue expenditure.
So capital expenditure is expenditure that is not recurring in nature and doesn't happen on a daily basis.
So what are the types of capital expenditure? You do this for normally to buy what?
Capital goods.
What are capital goods called?
Capital good assets.
Assets.
Okay. And the expenses that you do recurring, yearly, daily basis for the purpose of maintenance, they are called what expenditure?
Revenue expenditure.
Revenue expenditure. So when you buy goods, it is what expenditure? Capital or revenue?
Revenue.
Huh?
Revenue.
Because you buy on a daily basis.
Okay. And when you buy assets, it is what expenditure?
Capital expenditure.
Capital expenditure.
Okay. Now they want to know the amount of capital expenditure.
So you take computer.
So, Miss, you'll only calculate the assets, no?
Yeah, asset, but what would form the part of the cost of asset would be your capital expenditure.
Okay.
So basically, when we find the cost of asset, it is all expenses incurred up till using the asset for the first time. All expenses incurred up to using the assets for the first time, that would be your capital expenditure. So what would be the amount of capital expenditure over here?
You'll take computer system. Ink cartridges will get over, so you'll have to buy them on a recurring base. You
So
won't
this
take
is
that.
revenue expenditure, you mean to say?
Then 5, then 5 year maintenance contract will, I think, be capital expenditure.
By every 5 years, this will recur, right?
Oh, I thought
And it is
I
maintenance.
okay.
Miss, will it be like delivery cost?
Okay, delivery cost is necessary to pay because before using the asset, you need to get the asset delivered.
Yeah.
Yeah.
So what
So
is
it's
the
going to
amount
be
of capital
8070.
expenditure?
8,070.
8,070. So when I
Yeah.
talk about cost of assets, can you make a definition for cost of assets? Ashita, I can't see you.
Miss, I'm using my iPad only. My laptop has died, so I have to switch tabs.
What is cost of assets? Can you make a definition for cost of assets? All expenses that you incur to buy the product up to using the product for the first time. So whatever expenses that you do till the time you use the product for the first time will be added to the cost of the asset and it will become capital expenditure. Okay?
Yeah, miss.
Okay. Come on, what is cost of asset?
8,070.
What is cost of asset?
When you
8,000.
buy the product and use it to the like the first time, using it for the first time.
So up to using the product for the first time, whatever expenses you incur would be capital expenditure. Okay. This is related to depreciation, so this won't be there. Now try to figure out this. This is inventory valuation.
So if we do this, na F wala.
Try it.
Okay. Oh shit. She said, Ashton, you're on mute.
Come on, try. What would be the inventory cost?
Miss, you, I think you'll do 11.75 plus 1. 25. No, wait, that cannot be the answer.
Think.
Miss, I think
How is inventory
11.75.
valued? Tell me. How is inventory valued? Do you remember? How is inventory valued?
Miss, I don't remember.
It is valued at cost or net realizable value. Inventory is valued at cost or net realizable value, whichever is lower.
Oh, yeah.
Okay.
Hmm.
Now, what is the cost of your inventory?
11.75.
Your cost of the inventory is 11.75. What is the net realizable value of your inventory?
11.0.
11.05.
Net realizable value means the selling price minus the selling expenses. That means the expenses that you incur to sell the product. Okay?
Miss, the selling price is 18.50 and selling delivery is 1.25. So we have to minus that,
You
right?
have to minus the
18.50
selling
minus.
expenses. Yeah.
Okay.
Okay?
But that'll be higher than the cost, na then?
Yeah, so you have to compare. So 18.50 minus 1.25. It is 17.25. So what do they want you to know?
To
They
take the
want
lower.
you to know the value at which your inventory should be recorded in the financial statements. That means they want you to know the value of inventory. Now, inventory is valued at cost or the NRV, whichever is lower. What is cost? Cost is 11.75. NRV is selling price minus selling expenses. So it is 17.25. Tell me what is lower amongst the two?
11.75.
11.75. So your inventory will be valued at 11.75. Answer B. Are you with me?
Yeah.
Can I proceed?
Yeah.
Come on. Try this. This is related to partnership. We're going to do partnership again from scratch because after doing it 2-3 times, you become perfect in it. So probably tomorrow.
Okay.
Interest on drawing and interest on capital, which is recorded in which account? Current account.
Yeah.
Tell me,
Oh,
interest on drawings will be recorded on which side? They want the side if you see.
Double right.
Sorry?
It's interest on drawings is debit side and
Double.
capital is credit side. So
Credit.
it's C.
So which option?
C.
Option C.
Option C. Very well. Come on.
Miss, can you stop the recording for a second?
Come on. J. Which items limit the usefulness of financial statements? Why do we prepare financial statements?
To see the profit for the year.
What are financial statements included? What are things that are included in the financial statements?
Profit for the year.
Financial statements are two things. What are the two things that we record, what we call as financial statements?
Statement of financial position and
One is income statement
Hmm.
and one is what?
balance sheet.
Statement of financial position.
Statement of
Balance sheet.
financial position. Why do we prepare income statement?
To see the profit or loss for the year.
To
To
know
see
the
the
profit
incomes
or
and
loss.
losses of the year.
Why do we prepare statement of financial position?
To calculate assets and
Assets and
liabilities.
liabilities.
To know the position of your business, or to know the assets and liabilities. Okay. So what is the thing which will make the financial statements less useful? It will limit the usefulness.
Miss, older assets may be recorded at values which are no longer up to date.
So old assets will be recorded at their old price.
Yeah.
Okay. So how can
Okay.
the position of your assets and liabilities be affected if you record your assets at the purchase price?
Miss, because it's always for the current year, and if this is older assets should not
And
be.
Because if
depreciation
you have
later.
old assets, you're going to depreciate them, so the value is also
Yeah.
going to keep on reducing.
Yes, I think A, debts which cannot be longer collected are written off.
Older assets should be recorded at their values. Loans should be disclosed separately. Long-term loans should be disclosed separately, and short-term loans should be disclosed separately. Does this happen?
Yeah, long-term loans and
Non-current
non-current
liability and
liability.
current liability.
Current
So
liability.
it is making the statement of financial statements more useful.
Oh yeah, so it's
But we
limiting the
provide depreciation on all non-current assets. It is also making the financial statement more useful.
useful.
So what is not making financial statement useful?
A, debts which can no longer be collected are written off.
Bad debts. So what do we have to do if we have any bad debts? Prisha, you answer. If we have any bad debts, what do we have to do?
You minus it from the other incomes
Why do you minus it?
because they're bad debt, so it gets minus with your income
You
to
minus it from the
compensate.
trade receivables, right? Trade receivables minus new bad debts minus new RDD. We minus it from the trade receivables. Why do we minus this from the trade receivables? Because if we keep on showing that amount of bad debts in our trade receivables, it is not going to make any sense because we are not going to receive that money, right?
Yeah.
So A part. J is done. Come on, let's do the 2A part. Anybody knows the accounting equation?
Miss, is it asset plus capital minus liability?
Any nonsense you speak.
Miss, I don't. Actually, I was guessing, Miss.
Prisha, you
Asset
must be
plus
knowing
li-
the accounting equation. Prisha, you know the accounting equation. Think about the sources of funds equal to application of funds.
Asset is equal to liability plus capital.
Capital plus liability
Equals the asset.
Okay, what is meant by an asset?
Properties owned by a business.
business.
Amount yet to be received, properties owned by a business.
Yeah.
Right.
Miss, for C, you will write balance sheet, no?
Say, statement of financial position.
Yeah.
Balance sheet is Maharashtra State Board bill.
Three models.
Statement of financial position. Do you know the three types of ledger? Prisha, do you know the three types of ledger? We did yesterday. Do you know the three types of ledger, kids?
Miss journal, debtor, and creditor.
Miss, I think
Journal
it's
ledger and
Oh, creditor, debtor,
no.
credit.
You wrote it,
Normal.
right? You made your notes.
Miss,
Where is it?
Miss, I don't have my iPad with me, but my grandma. So I'm doing it on my phone right now.
We have one general ledger. What is the other ledger that you know?
purchase ledger and sales ledger, I think.
purchase
Huh?
and sales, yeah.
Yeah.
Purchase ledger and sales ledger. Okay, what do you record in general ledger?
Everything that's not related to sales or purchase.
In general ledger, you record all accounts of income, expenses, losses, and gains. In sales ledger, you will write the personal account of your customers. In purchase ledger, personal account of your suppliers. Now fill in which ledger this would go.
Miss, drawings, I'm not sure, but will it be in general ledger?
Yeah.
Okay, so drawings is general ledger, credit, debit.
Why credit?
Sorry, debit. I got confused.
Why debit?
Miss, because drawings is always debited.
Okay, fine.
This purchase ledger has the personal account of the customer, and sales ledger has the personal account of the seller, right?
Hmm?
Sales purchase journal has the personal account of customers, and sales journal has the personal account of seller.
Yes.
Miss, sales will be sales ledger credited because credit sales are recorded, na?
1 minute, wait. Drawings would be, it's everything extra. So it would be nominal ledger. Sales would be nominal ledger. Provision for delivery one, nominal ledger. Customer account, which ledger?
Sales
Sales.
ledger.
Oh, Miss, customer account will be this sales and
Sales
this the
ledger,
next one
supplier
is
account, which
purchase.
ledger?
Purchase ledger.
Purchase.
Purchase ledger.
Debit,
Debit, okay. Sales,
credit,
Credit.
customer,
credit.
Miss, this will also be
customer is
credit,
called
na?
what?
A credit
With
customer.
Customer is called what? Customer is called what? Trade receivable. Trade
Yeah.
receivable, is it your asset or your liability?
It's an asset.
Asset.
Asset. Assets have what balance?
Debit balance.
Debit balance.
Debit.
Miss, will be debit and purchase will be credit, na?
Credit.
Purchase, no. Supplier.
Oh, sorry, supplier.
Supplier will
Supplier would
Credit.
be credit and purchase would be debit or credit.
credit.
Provision. Any provision would always be what?
General was debit. Oh, sorry.
Credit.
Any provision would always be credit. When I teach you once, I expect you all to refer to the material and memorize the things. Come on. Why accounts are maintained in different ledgers? We did it yesterday. Try to recollect.
Miss, so information is kept all together and it's easy to refer and give it to a third party.
What?
I said so that it's easy to it's easy to refer if anyone else wants to refer, like a third party or something.
Okay, so that the work can be divided amongst people. This is the more appropriate reason. Okay, what is meant by a trial balance? Come on, tell me.
Miss, trial balance is a place where you a statement of finance. No, wait.
Prisha, what is a trial balance? Prisha, what is a trial balance?
So it's where all of the like entries are the
All the ledger account balances are put.
ledger account.
So what is a trial balance? It is a
But all
list
the
of
ledger account.
balances of ledger accounts at a particular date. What is a trial balance? What is a trial balance? Come on, tell me, learn it.
List of balances of ledger accounts at a
At a
particular
particular date.
Again, learn it. What is a trial balance?
A list of balance of ledger accounts at a particular date.
date.
Again, what is a trial balance?
A list. It is a list of balances of ledger accounts at a particular date.
State one reason why a trial balance is prepared.
To calculate the assets and liabilities.
Okay, you all need to learn this. We normally prepare a trial balance so that we can see whether we are arithmetically correct or not. Okay? We normally prepare a trial balance so that we can see what we are arithmetically prepared or not. Okay. So why do we prepare a trial balance? State one reason why a trial balance is prepared: to check the arithmetical accuracy of double entry. State one reason why a trial balance is prepared:
To check if you're arithmetically correct or not. Miss, what does
check
this
the
word mean?
arithmetical accuracy
Accuracy.
of double entry. Okay, learn this right now. What is a trial balance?
A list of uh, a list of balances of ledger accounts at a particular date.
Trial balance is a list of balances of the ledger account at a particular date.
A list
Prashant?
of balance of ledger accounts at a particular date.
Okay, again.
A list of balance of ledger accounts at a
Balances
particular date.
ledger accounts at a particular date.
Okay, fine. And state one reason why a trial balance is prepared:
To check the arithmetical accuracy of
Double
of
entry.
double entry.
okay,
Check the accuracy of the double entry.
arithmetical accuracy of the double entry.
Yeah.
Okay. Name one account which is prepared when a trial balance fails to agree.
Suspense account.
Suspense account. If your trial balance does not agree, then you prepare a suspense account. Okay, can you again tell me what is a trial balance?
A list of balances of ledger accounts at a particular date.
Trial
One
balance is
reason
a
why
list
a
of
trial
accounts at a
balances of a
particular
ledger
date.
account at a particular date.
Okay. One reason why a trial balance is prepared.
To check the arithmetical
Arithmetical
accuracy of
method.
double entry.
Okay. One account which is open if a trial balance fails to agree.
Suspense account.
Suspense account.
Suspense account.
Okay, fine. Now those who don't know ledger, okay, you'll have ledger also, right?
Yeah, yes, we do.
Okay, fine. So if you don't know ledger, this is the sum that is related to ledger. Farhad and Ali are traders. You have to see in whose books you are supposed to make an account.
All
We are
these,
making an account in whose books?
Ali.
all these.
Ali. So just think from Ali's point of view. Think that you are Ali and pass journal entries over here.
So sales, 250
Sales would
at
be
50
debit or
charge.
journal entry
Sales will be credit.
because it is an income.
Yeah.
And debit would be what?
Debit will be expenses and losses.
So Farhad.
In this entry, what will be debit?
Farhad will be debit.
Farhad will be debit. Very good. Okay, this is how much amount?
250.
250. So Farhad is debit. You're thinking from the point of view of whom?
Ali.
Yeah.
Ali. Farhad is what?
Debit.
Farhad is debit.
Again, Farhad is what?
Debit.
Farhad is.
Debit.
So on the debit side of Farhad, I will record sales. Are you with me?
Yeah.
Now, as soon as you record sales on the debit side, there should be a bulb in your mind that should shine in 360-degree volt. In which
SL
account do you have credit sales on the debit side?
debtors account.
Debtors account.
Which is also called
That is
what account?
Trade receipt.
trade receivable.
Or what account?
Sales ledger control account.
Sales ledger control account. This is your only main task to recognize that you are making which account. So now when you see that you have recorded credit sales on the debit side, I immediately came to a conclusion that I am making which account?
SLC.
SLC account. SLC account has certain rules. Come on, Prisha, tell me those rules. Prisha, tell me those rules.
Yeah. It starts with balance, BD, and everything. Most of it goes on the credit side, while DIR goes on the debit side, which is dishonored interest refund.
Okay, fine. So do you have a balance begin down in this account?
Yeah, you do, I think. 300.
Okay. Then you
Yeah.
had credit sales.
Old.
Now look at these two entries and tell me where will you record it?
You record sales return on the other side because sales
What
was on
date?
the debit side. On the 8th of Jan.
Amount.
250.
Amount.
Half of it, so 250 divided by 125.
Okay. Then
Miss, do we show cash discount over here?
cash discount is
Siren got
always
the
shown.
19.
Then what, Prisha?
The Siren got the 19 date.
Read, na?
Farhad paid the amount he owed on 1st Jan by check, having deducted 3% as discount. So 300 minus 3%, I think.
Okay, so how much he paid? How much he paid?
291
Okay.
I
How
think.
did he pay?
By check, so bank.
And then
Miss, how did you get 291?
Just
read.
3% of 300. You reduce it.
Acha, owed on 1st Jan. Okay.
So when you have to prepare a ledger account like this, your first step would be you will think from this person's point of view, pass the first entry, journal entry, and identify if it is an SLCA or a PLCA.
Okay.
Okay? Think from the person's point of view, pass the first journal entry, identify if it's an SLCA or PLCA, and make the account. Now, how do you close this account? Krishna, tell me which side is more?
As I think the debit side is more.
So I write it on both the sides.
Yeah.
From that, what do we do?
You minus 425 from it and write it as balance BD.
What is the total of all this?
425.
Yeah. So that would be
100 and, yeah, 125.
that would be a balance,
Goes down.
and this would be a balance.
Balance gone down. Brought down.
Which date?
February 1st.
Okay, fine. Are you with me?
Yes.
Come on. 5th of January. What has happened? 5th of January, what has happened?
Sales.
Which sales?
Debit sales.
Credit sales. Now look at the business documents.
Sorry.
I'm giving you a revision of business documents. If you have invoice, okay, if you have issued an invoice, that means you have done credit sales. If you have received an invoice, that means you have done credit purchases. Are you with me?
Yeah.
Yeah.
Credit note. If you have received a credit note, that means you have done sales return. If you have issued a credit note, that means you have received sales return. If you have received a credit note, that means you have done purchase returns. Just memorize it this way, however you want. Invoice issued, credit sales. Invoice received, credit purchases. Credit note issued, sales return. Credit note received, purchase return. Credit sales is recorded in which books? What would be the books of prime entry to record credit sales? Anybody?
Miss, what did you ask?
What would be the books of prime entry to record credit sales?
Sales journal.
Now, other than IRA, what would be the books of prime entry to record credit purchases?
Purchase journal.
Purchase journal.
Books of prime entry to record sales return. Sales return journal.
And for purchase return again.
Books
Purchase
of prime entry to record purchase return.
return journal.
Purchase return journal. I'm giving you some time. Write it somewhere. Can
Credit
you tell me
sales.
this is what sales? Credit sales.
Debit sales.
Credit sales. So for 5th of January, you have had credit sales. Can you tell me the document that you would give, that Ali would give to Farhad?
Miss, will be invoice issued.
Ali has done credit sales. Ali has done credit
Invoice
sales.
issued.
So the document that Ali will give to Farhad would be invoice. He will issue an invoice. Prisha, are you
Yeah.
with me?
Yeah.
Why do you give an invoice to anybody? If you've
Because
sold
To
goods on
make sure the
credit,
person pays you the money. Ira, to make sure that the person pays you
if
the
you
money.
have sold goods on credit, why would you give somebody an invoice? What do you want to prove by giving an invoice?
to make sure they pay you the money.
Which
Yeah.
money?
Money that you sold.
So you issue an invoice as a proof that
Not for me.
Farhad has bought so many goods and he has to pay you this much money and he has not paid. Invoice is for credit sales. Whenever you do credit sales, you give an invoice. So it acts as a proof. To inform Farhad of the quantity of goods bought and The price of the goods. Okay?
Yeah.
Okay.
8th of January. What has happened?
Sales have been returned. I mean, it has been
What has
returned.
happened?
The goods.
Sales
Sales
return. Sales return. What document?
Credit
Capital.
note issued.
Credit note. Invoice issued, sales. Credit note issued, sales return. I'm repeating. Invoice issued, sales. Credit note issued, sales return.
Return.
Invoice issued,
Sales.
credit note issued,
Sales
Sales.
return.
sales return. So what could be the reason of giving a credit note for sales return? To inform Farhad that goods returned allowance has been given. Now listen to me very carefully, okay? Listen to me very carefully. This is, I'm teaching you something which is logical. Who sold the goods on credit?
Ali.
Ali. To whom did he sell?
To Farhad.
Others also please answer.
Farhad.
Farhad. So for Ali, Farhad is what? A trade receivable or a trade payable?
For Ali, it's a trade receivable.
Aida, please give
receivable.
others an
Trade
opportunity to
receivable.
answer.
Miss,
Sorry.
seriously, I don't know, be quiet. Miss, it's trade receivable.
Okay. So
Yeah.
for Ali, Farhad is what?
Trade receivable.
Trade receivable.
Trade receivables have what balance?
Credit.
Think properly. Is trade
Debit
receivable
balance.
an asset for
It's an
you?
asset. Sorry, miss, it's debit balance. Amro, sorry.
Trade receivables have what balance?
Debit.
Debit balance.
So when a trade receivable has debit balance, that means it shows the amounts yet to be received. Yes or no?
Yeah.
Okay.
Yes, miss.
So when this trade receivable returns the good back to you, I'm repeating again. When this trade receivable will return the good back to you, you are going to credit his account. Think and tell properly. Analyze it, think, digest, and tell me, did you understand this or no?
We credit his account in the ledger, no?
You're going to credit his account in the journal entry.
Okay.
Okay?
Journal entry.
And from the trade receivables, you will minus that amount and you will say minus sales return. Debit minus is credit, right? That is the reason when a debtor or a trade receivable returns the good, I give him a credit note. I give him a credit note to tell him that I have credited your account. I have removed the balance that you had to pay me from your account. I have credited your account. Are you with me?
Yeah.
Yes, miss.
If not, come on, chalo. Books of prime entry. Ali sold to Farhad.
Sales journal.
Sales journal. Farhad returned the goods bought on 5th February. Now they
Sales
want the
return
books
journal.
of
Sales
prime
return
entry for
journal.
whom? Ali. Yeah? They want the books of prime entry for whom? Ali.
Ali.
Ali, so sales
If they
return
want it
journal.
for Farhad, then
Sales.
it would be what?
Purchase return.
Purchase return.
Okay, so for Ali, it would be sales return journal. Farhad paid the amount.
Cash book.
Very good. Cash book. So with this, a little of all the chapters is coming in. Prisha, it
Ira,
would
are
be
you
a little
okay?
difficult for you to digest, but then you have to ultimately digest it till the time you do not remove time to take full-fledged lectures. I want you all to go to page number 35. Try the journal entries.
Miss, I have a question. 1 second, can you stop recording? It's
Yeah.
thoda aisa, not recording type.
Try these journal entries yourself. Then
I
the
think
remaining.
capital credits and funds.
Okay. Where is it that the owner has brought in money?
And the cost long term back.
Speak in English.
Yeah.
Speak proper words in English.
Miss, which page is this?
Okay, ma.
Haya, what is this? 35.
Okay.
Think about the second one.
Bought
Miss,
delivery van, so it's a purchase. So we'll go on
Is
the
delivery
credit
van
side.
your goods?
Yeah, it's a good. You're getting goods, so we'll go on the debit side. Delivery van and bank credit side.
Can't you tell delivery van is an asset?
Yeah. Okay.
What is the difference between goods and assets?
Because assets on the credit side.
What? Assets
Okay.
are the things that you use in business,
Yeah, sun goods are the ones that you don't resell, I think.
that you resell.
Yeah, that you do resell, sorry.
Assets are the things that you
Use.
goods you resell.
Okay.
Assets you
Is assets you resell or
use.
goods you resell?
Assets you use. Goods you resell.
And goods you resell. Yeah.
Again,
can't
assets
resell
you
assets.
use.
Use.
Goods you.
Resell.
Again, tell me assets you.
You use assets and you resell goods.
So delivery van is goods or asset?
It's a good, I think.
Do you have some connection issues?
Guys. No, the delivery van will be assets.
Why?
Because you can't resell a delivery van.
Because you're going to use it.
Yeah, okay.
Again, assets you.
Assets you use and goods you resell.
Okay. So delivery van is asset or goods?
Asset.
Why?
Because you use it.
Fish, I'll hit you now.
Okay. Now assets coming in or going out?
You're getting the assets, what's going on.
Coming in, not going in.
Yeah, miss, it means the same thing.
No, it doesn't means the same thing. You can
Yeah,
come
miss,
in.
it's coming
You can
in.
go out. You cannot come out
Okay.
because you can only come out from a relationship.
Oh, okay.
Delivery van.
Okay.
What is going out?
8,000. Or money, because you're paying by check, so bank. 8,000.
Come on. Inventory is assets or goods?
Asset.
Do you use the inventory or do you sell your inventory?
You sell it. Okay, so it's a good.
Good. So when you buy goods, you will use the word purchases.
Purchase. Yeah.
And purchase is always
debiting.
What is the account that you will credit?
John on credit. So you probably took it from John. So you write John.
Come on, this one.
Sales and cash
Sales would always be
on creditor.
50 or 80.
So 80, I think.
What will be debited?
Cash 50.
You will sell for 80, but you will take 50 rupees.
50.
Huh?
80 then.
Yeah. Come on, I want you to go to this paper. Ashita and Prisha, you all will also do the manufacturing account of quick flow of this paper.
Miss, can I do that tomorrow? But
Tomorrow only. Now, come on.
okay.
Come on now. MCQ.